Welcome back, everybody. Today is a good one today and a more knowledgeable one. I just invested into one share that provides me ownership of 64 different companies. Now you're gonna ask yourself, how the hell can I be an owner of 64 different companies when I just bought one share? And the share price for that company was $127. So imagine having $127 and owning 64 different companies. You don't hear about this a lot. A lot of the stocks I do buy, they are individual stocks. So let's just say ExxonMobil, you guys know the Mobil gas station. You buy one share of that and you only own a piece of just that company. But today I'm going to be talking about ETFs, which are exchange traded funds, and they provide you with a ton of companies that are compounded into one price that you could buy at. Okay, I'm back on my laptop, and today I'm talking about exchange traded funds, which are ETFs. So let's just go into the definition of what an ETF is. We just zoom in right here. Okay, an exchange traded fund, an ETF, is an investment fund traded on stock exchanges, much like stocks, okay? An ETF holds assets such as stocks, commodities, or bonds, and generally operates with an arbitrage mechanism designed to keep it trading close to its net asset value, although deviation can occasionally occur. So probably what you guys just read right here is probably French or Spanish to you guys if you guys speak only English. So what an ETF actually means is that it trades like a stock, which means you could buy it on the stock market for one price, okay? But within this one price, you own a vast majority of different companies that are in different sectors, okay? So I'm gonna show you guys what I had just bought over here, XLY. Now this is select sector, SPDRS. I'm gonna put the link down in the description and you guys can check out. Right here, you can go to sector and they have all different types of sectors like communications, consumer discretionary, financials, materials, utilities, technology, real estate, and so on and so forth. But these are ETFs, which have a lot of different companies within the one stock, okay? But the one that I'm going to be showing you guys is the stock that I bought last Wednesday. It was actually a gift to me for my birthday, so shout out to my friend Andy for buying me that one. It cost $127.99, okay? Let's break down what this is. Down below right here, we have holdings, okay? Now this is what this one share buys you. So as you can see, Amazon, Home Depot, McDonald's, Nike, Starbucks, and the list goes on and on and on, and you can just go on with the next pages and such like that. So for this one price of $127.99, I am now a part owner of Amazon, Home Depot, McDonald's, and so on and so forth. Right here, the index weight means that for every single dollar, let's just say, for example, Amazon, for every dollar, 23% of that dollar goes to Amazon stock. So I own a piece of Amazon's company with that $1. So $1, you do 23% of $1, which equals to about 23 cents of every single dollar of the $127 goes to Amazon as an investment. And as you can see, it's weighted, so you guys can do the math on how much each dollar goes to each company. And they have the things like last change percentage, the volume, and 52-week range. You don't really have to get into any of that. ETFs are, safe investments because they are diversified within the stock. So you're gonna see this price right here. It won't ever probably move as dramatic as if you just owned a single stock like Amazon. So if you just had all your eggs in one basket and had just an Amazon stock, the price would probably fluctuate a lot more because it only depends on what Amazon is doing. Opposed to an ETF like XLY, I have 64 different companies that are working at the same time, which then means that a lot of these companies right here can do good, but and then some of them can do bad, and then it'll equal out. That's why you don't see the price change dramatically. You know what I'm saying? So it's been up 45 cents in one day. So we could look at the performance. Now this website is good. They have, like I showed you, all those different other industries that you could get into. So right here, net asset value. This is the value and the total returns of how much the stock is bringing me every month, last quarter, year to date. So in the last month, it's been up 2.83%. As you can see right there, it's a growth stock and it does pay a dividend, guys. But you know, it's good to see that your asset is gaining value. Last quarter, 4.27%, and then year to date is $28.42. I mean, from the same time last year today up until now, this stock has been up 28%, which is huge, guys. It's been huge. So, you know, just to see that good growth go over time, and they have the Home Depots, the Amazon, so you know it's going to be growing in price value. As you can see right here, the 2019 dividends of all time, you know, they pay out about 40 cents per share, which equals up to $1.60, as you can see, rate/share. So, you know, it pays a good dividend and you get that growth. That's the important part about this ETF, that the stock price is growing, so that in the future, if you do want to sell it, you can sell it at a good gain. And in the meantime, you're getting that $1.60 per share. And as you can see, all the way back from 2010, this ETF was paying out 50 cents a year, and it's moved up dramatically over the last 10 years. As you can see, from 50 cents, it's gained its dividend all the way up to $1.60. Which is great, which means that they have room to grow the dividend, and the dividend is good. That's what I always look for. I don't buy stocks that do not pay a dividend because I want to produce cash flow. Remember that, guys. But let's just, you know, look at details. Number of holdings, 64. That's a lot of different companies within one share, you know, and one stock price. So, guys, there's deals out there that, you know, you don't have to be an expert on picking certain stocks that are going to be winners, because they have, you know, funds like this, the XLY, as you can see over here, XLPs, XLV, XLI, that have lots of different companies within one, you know, one umbrella, under the one umbrella. So you don't have to pick certain stocks. You know, if you do want to get into investing, I do say get into ETFs and do index funds, because that is where, you know, there's low risk because there's a diversified portfolio within a certain sector. If any of this makes sense to you guys, great. And I'm glad that you guys already know this right now. But if you do have any questions, please comment down below anything, or you could email me. Just go to my page and hit the email button and send me a message. But as far as index funds and ETFs, guys, I'm going to put this website, the select sector, down below in the description. So go ahead when you have time. You don't have to necessarily buy these right away, but if you have time, just check out all the different ETFs that, you know, that they have to offer. As you can see right here, they break it down by, you know, sector and industry. They show you how much it costs right here, and then it shows you the volume, the percentage change. So volume pretty much means that this is how many times it gets traded. So people buy and sell a day. So as you can see, there's a lot of movement in the financials ETF, which means that it's been traded 38.82 million times a day. And that is significant because, you know, it moves a lot faster than all the little ones. As you can see, real estate is 3.01 million. And in real estate, in the real world, it kind of does reflect in the same in the market, because, you know, people don't just buy and sell real estate just like that quickly. You know, it's usually a long-term investment that they keep over time. That's why you can see the volume is very low, because people are holding on to these. Let's just check this one out real quick. And this one is called, let's go back, XLRE. Let's click on that. And as you can see right here, it tells you all the data. This one doesn't pay a dividend, but you can see, you know, 52-week high is $40, and then the 52-week low is $32, and it's currently trading near its high. So, you know, just wait for a discount, or just buy in right now if you do like it. But remember, guys, I don't buy it because it doesn't have a dividend. I like cash flow, and that doesn't mean I like it. It's more like I need cash flow. Number of holdings right here are 31 different companies. Click on this right here, holdings, to see a more detailed chart about what they actually do hold. So American Tower, Crown Castle, Equinix, Welltower, Public Storage. You guys might know what Public Storage is because, this is a place where you pretty much rent out space so that you could put your extra stuff in it if you don't have space in your home. Simon Property Group. If you do follow my channel, and every single week I've had Simon Property Group on my list of stocks that I want to buy, and they do own some of Simon Property Group, 5% of it. So every single dollar, 5 cents will be going to Simon Property Group as an investment, and they have 31 different stocks. And Simon Property Group is, the biggest national retail mall real estate company. So they have some heavy hitters on it, but the only thing I do not like about this is that it doesn't pay a dividend, and you guys know exactly how I feel about that. But anyways, let's just wrap this one up and then call it. Thank you guys for watching so much. Please like and subscribe to the video and to the channel. Thank you guys for listening, and learning about ETFs, and we're gonna get into more different types of funds, bonds. If you guys were interested in ever learning about these different types of investment options, you don't have to just invest into solo companies. You can invest into a fund which owns a ton of different companies, so that it's less risky compared to just ownership of one stock. Thank you guys, and I'll see you guys in the next video. So long.